Over a year ago, we had our kids from age 1 to age 14 pick 5 stocks each from the entire S&P 500, and we invested that money for a year, and the results are pretty impressive.
We brought our kids into the office. We wrote down each name of each company in the S&P 500, put it on a sticky note, and put it on our wall.
And this was the process.
It was a process.
Yeah.
And we gave each of our kids 30 seconds, all at the same time, to pick 5 different stocks.
Yeah, and in retrospect, maybe 30 seconds wasn't long enough.
It was not a rigorous experiment in that regard. But it wanted to prove our point even more of what we're doing here.
You hear about those sayings that like, hey, it's so easy to invest in the stock market, just pick the ones that go up. Don't invest in bad companies, invest in only good companies. Or maybe you could just take a dart and just throw it at the wall and just pick a handful of stocks, and chances are you would do pretty well.
What does he do? Does he look at the 14s? He does. He's got 2 at the double 14 for the title. He's done it. He's won it. He's won on home soil.
We essentially wanted to run that experiment.
They picked for a number of reasons, right? We had some educated picks around the economy, projections of what they think we might be in a recession, why they picked certain companies, and then we even had picks about my daughter saying it wanted to be picked. And that's why she picked the company. It just wanted to be picked. But again, it's trying to track and see, how did our kids do? Because again, we had a point, we figured that they probably would do pretty close to the S&P 500.
Yeah.
And you see this constantly. Wall Street tries to pretend they have the secret. They know what's going on, whether it's economic predictions, whether it's market predictions, whether it's they're trying to sell their mutual fund and they're showing you, look how it's outperformed or look how it's done. We think you should take all that with a grain of salt, though.
I think Wall Street is one of the very few areas of the economy where the layman can actually outperform the expert. I don't know if you could really say that about any other industry.
Not many other fields, where the amateur can do just as good or better than the expert.
Yeah, it's pretty astounding. All right, Miss Emily, do you know what stocks that you want to try to go for when we say go?
Not really.
Not really?
But I'm trying to go for like Apple or...
So look behind you. All of those are the S&P 500. All of those companies make up the S&P 500. So don't look at it too much. You can't cheat. All right, so Apple, any other companies? Like there's Ford, there's Amazon, there's Kellogg.
I mean, Amazon might be good.
All right, because remember, you only got 30 seconds. So if you find a company that you think you like, grab it before someone else does. Okay? All right, good luck out there. All right, Hayden, how you doing?
Good.
Okay, do you know what stocks you are going to vie for?
I'd start with the heavy hitter, Apple.
Okay.
Reliable choice. Maybe Microsoft. Second choice. Maybe Tesla. I mean, it's been falling, but it might bump back up.
Okay, that's a good choice.
Maybe General Motors, too.
Okay.
And maybe, I don't know, AT&T.
Okay.
There we go.
Ready, set, go.
Okay, take 5 off the wall. Any 5. Go up.
Nice.
Wow, I'm sticking to a central theme here.
There you go. That's 1.
Yeah, no, that's 5. That's 5.
Five.
That's
Good
5.
job.
That's good job.
Good job.
15 seconds left.
Good. Bring those over here, Hannah.
Jesus.
Yeah.
Yeah, good. High five.
Cora's got 1. Nice.
Go on, get 4 more. Keep taking them.
5, 4, 3, 2,
I don't know. There we go.
2.5, and stop. All right, does everyone have 5?
Cora got 1. Nope, there's 2, 3.
Okay.
I don't know what these companies are.
Yeah.
4, 5.
All right.
There we go.
All right, let's see how you did, Hayden. What's your first stock that you picked?
Okay, I'll start from the worst and I'll move to the big ones.
Okay.
So with time running out, I picked Pfizer.
All right. Drug company. Pfizer's big, right? All right.
But I don't know if it's getting bigger. Then, second to last was Nike.
Nike. Nice.
Then, my 3 big ones were Tesla.
Tesla. All right, so it's beaten up stock. It's probably one of the worst performing stocks in the S&P 500.
And I'm hoping it'll go
Nice
back
rebound.
up.
Okay. Smart.
Qualcomm.
Okay. San Diego company, chip company.
And then the big one, Microsoft.
And Microsoft. Yep, can't go wrong with that. All right, nice job. How much research did you do before choosing the stocks?
0.
Zero research. All right.
Mistake on my part.
Who do I pick?
Let's see. Oh, Hershey Company? Do you know what Hershey makes? Hershey makes chocolates. Do you like chocolate?
Yeah.
Okay, great. Allstate. Ooh, why'd you pick Allstate?
Because I want to pick Allstate.
Okay. Mettler Toledo International, why'd you pick them?
Because they want to be picked.
They wanted to be picked. Oh, okay. You're going with some vibes. All right. How about State Street?
Dad notes that he's on the state.
Okay. Ooh, TE Connectivity. Why'd you choose them?
Because they want to be chosen.
They want to be choose. Okay. It was calling to you, basically. Now, we're going to build a portfolio of investments, okay? And we're going to invest some money. Do you think you're going to beat Warren Buffett?
Yes.
You do? Okay. Great. What will you do if you beat Warren Buffett and other Wall Street managers? What do you think you'll do? Hey, high five. Good job. Yeah.
All right, little girl, let's see what you got.
Okay, so I have Costco.
Costco's great. That's a great stock. All right, nice job.
FedEx.
FedEx. Okay, that's good.
Netflix.
So why'd you choose Netflix?
Because I feel like a lot of people are watching stuff on Netflix now because it's like a
Yeah.
TV.
Plug it in!
What, the rock tumbler or the TV?
The TV!
All right, you watch Netflix.
Yeah.
All right, so like Warren Buffett, you invest in what you know.
Yeah, I know all these companies. So yeah.
Good, okay.
Visa.
Okay.
And then AutoZone.
Why AutoZone?
It was only 5 seconds left. And I
There's only
picked something random.
Do you know what AutoZone does?
I've heard of it.
You've heard of the
But
company. That's okay. You're doing great. All right.
Okay, Cora, what did you pick? Oh, we're eating one. TransDM Group, okay. Albemarle Corporation, okay. What else do we have here? Got some goldfish crackers all over. Gartner Inc., good choice there. What else did you get? Copart Inc., ooh, interesting. Yep, that's a mic. Ooh, CBRE, commercial real estate. Why'd you choose this one? What do you think real estate's going to do?
Yeah.
Okay, Cora, big question. Do you think you're going to beat Warren Buffett? Is that a yes or a no? High five. High five. Yes, you're going to win.
Okay, Hayden, my son, he did pretty good. He was one of the better performers. His best performing stock was Tesla.
Yep.
So he bought Tesla, he bought Qualcomm, Nike, and Pfizer. And if you listen to his thought process last year as to why he bought this, it was pretty insightful. I thought he did a pretty good job.
Yeah, he did a good job. He knew what he was doing. He was intentional around what he was looking for when he was trying to pick.
Yeah, and he absolutely nailed it whenever we asked him, what do you think your best stock is going to be and what do you think your worst stock is going to be?
My daughter Hannah went with a different approach of just trying to feel the vibes of the sticky notes in the company. So every time she picked a company, she just said it wanted to be picked. And she went with Hershey, which is interesting because she loves chocolate.
Yeah.
Went with Allstate, State Street, and her portfolio actually was pretty impressive. It was negative, which was pretty hard to do when you think about it last year. So her process, her strategy, while rigorous and backed by data, was probably not the best approach looking back on it now.
So Emily, she was our best performer out of all of our kids.
What a portfolio.
She bought Costco, Netflix, and a handful of other stocks. Pure luck. I can't say that she really had a strategy.
Yeah, some
at
luck.
all.
She also had some reasoning of, I know these companies. And I feel like if you ask a lot of people why they invest, that's a really common answer. It doesn't mean it's a good way to do it. They hear that old Peter Lynch quote of like, invest in what you know. So they think, oh, I use Apple, I watch Disney, I'm going to buy these things. Mm-hmm. Sometimes it works, sometimes it doesn't. It did work great for Emily. I mean, she built an amazing portfolio.
Yeah, she's
it's
gonna
incredible.
Be a portfolio manager one day.
One day.
It's so easy.
One day. It's that easy. My 1-year-old Cora went a little bit more industrial and aerospace with her picks, and Transdigm was her best performer. She also had Copart in there. So it was interesting. Her portfolio on its own actually beat Warren Buffett. So she's got a bright future.
You know, I have to say, I haven't heard half of these names.
No, all of her picks I'd never heard of before. So overall what we did is we took all these picks together, all these kids, put them together into one portfolio. Yep. We went on to Robinhood and bought them equal weight. So we bought an equal amount of dollars of each one of these stocks, and we've tracked it over the past year again, under the impression and experiment that they'll probably do pretty well. They very well might match the S&P or match Warren Buffett, or sure enough, what they did was they actually beat Warren Buffett and the S&P 500.
Yeah, the well-shift portfolio. I mean, new hedge fund managers out there.
New hedge fund managers right
If
here.
any of you are looking for some place to place your money, invest in our kids. They're doing great. They're doing really, really
This
good.
is what we've learned. Over the past year, this kid's combined portfolio did just over 25%. When you compare that to the S&P 500, that was just under 24. And when you compare that to Warren Buffett, barely over 17. So crushing Warren Buffett.
If we were to film this episode last October or November, like early November, late October, whenever the market was down, we would actually be underperforming both.
Yep.
So timing is everything. Obviously, late in 2023, we've had this huge rally in the market up and through Christmas into the new year. And so that certainly helped a portfolio like this, which has a lot of beta. I mean, if you look at this portfolio compared to just the S&P 500, it's a very high beta portfolio, meaning whenever the market tends to do poorly, it tends to do really poorly. Or if the market tends to do really well, it tends to do really well. It's just like sort of like a built-in leverage almost with beta. So
And a much more volatile portfolio. What's interesting is there's a thing you hear about in the investment world called backtesting. That's where you take a look at a strategy, you take a look, what would it have done in certain situations, let's say 2008 or the dot-com bubble, or look over the last 5 years. And what we see is over the past year, this portfolio has done great since it was invested. It's outperformed. When you look over the past 5 years, it's done amazingly well. So when you look over the past 5 years, our kids' portfolio would have compounded at just over 223%. You compare that to the S&P 500 at 94 and Warren Buffett at just over 77. So what we're trying to show also is a word of caution, right? You always see everyday investors constantly chasing the next hot stop, whether it's like the Magnificent Seven right now, or the new fund that's investing in AI or EV. Anybody on Wall Street can make any performance or any strategy look good when they cherry pick the right time and they look at the right circumstances.
And you have an element of that within this portfolio. But within these past 5 years, if you back test this portfolio, is that you have Tesla and you have Microsoft.
Yep.
And these are all names that our kids recognize. I mean, my son, he was on a mission. Like he knew exactly which stocks he was going to pick. He didn't get all of them, but he did get Tesla and he did get Microsoft. I mean, obviously those two stocks have done phenomenally well over the past 5 years.
Absolutely incredible.
And so that's a big reason why. So you do have a little bit of that recency bias and that survivorship bias as well, sort of baked into this portfolio.
But I think it's important. That's what everyday investors think about. They hear about Apple and Tesla and Nvidia and Microsoft, and they naturally think it's done amazingly well. Why don't I just go ahead and buy that? It's going to continue to do that. But that's just not the case when it comes to investing. And you see that across everything. When you look at whether it be mutual fund managers, right? This SPIVA scorecard, it's the Standard & Poor's tracks indexes versus active management. And we laugh about this, and that was kind of the goal of our experiment is the best investors in the world, these are sharp people that do run these funds. They can't outperform the benchmark. They can't beat the S&P 500. And especially when you project it out over the long term.
Yeah, I mean, if you are going to be outperforming the S&P 500, chances are it is luck. Because if you can consistently outperform the S&P 500, you are one of the greats. You are a Stanley Druckenmiller. You are a Warren Buffett, right? And you are a billionaire, but you do have an entire industry full of people who have their MBAs, they have their CFAs, they've gone to very fancy schools.
I'm very important. I have many leather-bound books.
And they've spent their entire life dedicated to understanding the economy, understanding companies and their sectors, and understanding how margin expansion impacts profitability and same-store sales growth and all this other stuff. And there's so much analytics and research and hard work that goes into trying to pick these stocks which they think are undervalued and are going to continue to grow. And it doesn't work.
It doesn't work.
It doesn't work.
And you're all competing against each other.
And you're all
It's really, really tricky.
It's just such a competitive field. Standard & Poor's does this research study where they track the number of managers that outperform, and they use this with funds. And so within the U.S. large cap market, the S&P 500, right? How many funds have actually underperformed the S&P 500 over the past 15 years? 92%.
Yeah.
92% of companies have underperformed the S&P 500 over the past 15 years. That's massive. I mean, that's, if you were to walk away with anything from this video, like that is the single biggest stat that you should know. So our kids outperforming the S&P 500 and Warren Buffett is a total fluke.
Yeah, they did not have some skill.
No,
and remember that when you see funds that outperform the market, don't just think, oh, they've got some secret sauce, they've got some trading algorithm, they know something. I relate it to, especially with short term, when you look at this outperformance, the shorter the time period, so when you look at the 1 year, the 3, the 5, the 10, the 15, the underperformance gets bigger as you go a longer time period. And that makes sense because luck slowly gets less involved. I relate it to if I were to do like a free throw contest with Michael Jordan, if we shoot one time,
just one time,
there's a chance I make and he misses and I win. Does that mean I'm better than Michael Jordan? Absolutely not. But if we start shooting, as we add more shots and more shots, the real probabilities are going to come into effect now. And once we get beyond, I don't know, probably 3, I'm losing.
Yeah, after 3.
Almost every time.
Yeah.
Maybe 5? I don't know.
It's the same thing with Vegas, right? Like if the minute you sit down at a table or a slot machine and you start to bet some real money and you apply that same logic, right? If you start winning, only have 3 or 5 hands, you're like, God, I'm up. Maybe it's time to walk away.
Maybe it's time to walk
away. Maybe it's time to walk away. So if you sit there long enough and you continue to play hand after hand or round after round, that probability is going to kick in and the odds are against you.
You got me feeling lucky. I'm putting everything on black.
19 red.
You're going to have a very, very slim luck of actually outperforming. And that same logic of probability applies to the markets as well when it comes to actively picking stocks or any investments really. If you enjoyed this video and if you want some more content like this, please hit subscribe, comment below, engage with us. You will be notified of new videos as they come out. We try to record these regularly and they do come out every Saturday morning.